how about those Cubs? The Bears?
Yeah.
Aaron Rodgers? Yeah, that's gonna hurt. So, good to see you guys. Welcome to Invest NWI. This is the best real estate investment club in Highland. So, we're trying to grow that to Highland, Munster. Eventually we'll say the county, and then we'll say Northwest Indiana, but we need your help to continue to grow that. So, let me ask, anybody do anything exciting as far as real estate in the past 30 days? Buy a house, sell a house, kick a tenant out?
A couple of wholesales.
Cool.
Bought a few houses and got a few under contract. Got a cash offer on one that I have listed, so close next week.
There you go.
Yeah.
About 25 apartments in East Chicago.
25 separate buildings or a 25 unit?
5 buildings.
Okay. That's exciting.
It's my first adventure in East Chicago, so we'll see how exciting it gets.
I'll help you out. I'll give you the cash deal if you don't want them. Hey now. Anyone else do anything exciting? That's a good month. Got a bunch of deals going on. So, cool. Here's our fun stuff. Our mission statement, and this is our, what is this? This is October, so this is our 10th meeting. But we formed this group to really just bring together a bunch of investors that have a common purpose, a common goal, and it's just to provide an environment where we can provide relevant education, networking, and a place just to grow your personal network. I got to do the legal disclaimer because we do have some attorneys here today. All of the material and content is for educational purposes only. It's not legal advice. I am not an attorney. I don't want to be one. Make sure you contact your own attorneys prior to doing any activities. The success or the lack of success that the speakers have is their own personal experiences. That does not guarantee whether or not your venture will be successful. Definitely consult with your own attorneys, CPAs, and professionals before you do anything crazy as far as investing in real estate. All right, a couple of useful tips and tools. If you are on Facebook and you have not liked the group, go to the group page. It's Invest NWI Investor Group. Like it, and then if you have a question, or if you need a contract, or if you need, if you want feedback on a potential deal that you're looking at, you don't have to post the address, post the details, and we'll get some feedback on that. We also post a video for the upcoming speakers, events. You can post deals that you have, and again, you can ask some questions. If you have a question about the group, email group@investnwi, and you can also email the group for the videos. We record all of the videos. These are the ones that we have available. We did a house flipping one in June. Who was here for that? About a third of you. Did you guys learn something when Dave was here? It was a very, very good video. So if you flip houses, you definitely want to watch that one. And then in July, we had a rental roundtable. We had 3 investors that probably combined had over 50 years of experience with rentals. People that rented stuff from Gary all the way to like Munster. So just a wide range of topics and experiences there. That was another good one. August, we talked about buying tax liens. And then last month, who was here last month? Was that a good meeting? Ryan was our talker on multifamily investing. Talked a lot about the differences between investing in multifamily and single family. And I learned a ton from that as well. So if you're interested in those videos, they are $10 a piece for non-members. If you are a member, then just shoot me an email, and I can send you a copy of the videos that you were here for a member of. All right, who has purchased a rental that was already occupied? When the tenant moved out, and they took all the appliances, were those appliances the tenant's or were they yours? How do you know?
When we purchased it from the other investor,
Okay.
that was in there of what was in the house when he sold it to me.
In the purchase contract?
Correct.
Okay. I've had a couple of people talk to me about houses that they picked up that were occupied, and tenants say something, the landlord says something, they close on the house, and then they go back and the tenant's like, well, my rent's really due on the 15th. And they're like, well, it says the 1st here. Well, he's always collected it on the 15th. Or they've had it where the tenant moves out and they take all the appliances, and the new owner is like, I thought those were my appliances. I paid extra money for the house. So one way to protect yourself is this thing called an estoppel letter. Has anyone ever heard of that before? All right. What it does, and this is just the highlights, there's lots of different versions of it, but it basically is the tenant certifying that what's in the lease is accurate. So it has their name, it has the landlord's information, it has dates in it, when their lease started, when it ends, when it was last renewed. It also has the money, how much they're paying in rent, how much of a security deposit was collected. You know, I just bought a house that was occupied. At closing, I got a credit for the security deposit. Now I already sold that house, I had to give a credit to that buyer, but if there's no security deposit there, the tenant could be like, hey, I'm leaving, give me my security deposit back, but I might not have got one. So that's stated in there. It also has late fees. And then other thing, any other special arrangements, personal property. If, you know, before you buy the house, make sure you know whose washer, dryer, whose stove, whose fridge that is. Because if the tenants leave, it's just basically your word against theirs. So this is one that I have. All right, I can't figure out how to zoom in on that, but you can just see at the top here, it has like their name, the date of it, the location, landlord's name, tenant's name, security deposit, when they pay, when it started, when it expires. And then down here in 7, this is where we put personal property and anything else. And if you Google these, if you talk to your attorney, there's lots of different versions of this. But at the end of the day, it's just so you know exactly any other arrangements that they had prior to you buying that property. And this would be for anything commercial leases, you'd want to do this. Residential leases, if you're buying a house that's already occupied, definitely talk to your attorney, get a letter like this to fill out. I gotta find my mouse, there we go. I'm not very tech, there we go. Has anyone ever used one of those before? I'd hope so. It is a very good tool when you're buying properties that are already occupied. All right, I think I have to click over here again. All right, so our success story tonight is Travis Weldon with TK Properties of Illinois. And I think he's going to talk about one of his rentals.
Yeah.
How many properties have you bought in like the last 2 years?
We're closing on number 9.
Number 9.
Yeah. So we did quite a bit. So, so this is, again, my name's Travis. This is one of the houses that we just refinanced. This one's in Hammonds off of 2035 169th. I call this the pool house because my wife isn't very good with numbers, so we have to like describe it by stuff that's actually in the house so she knows what we're talking about and where we're going to. So I refer to this one as the pool house quite a bit. So, and this was actually Adrian and Justin helped me with getting this house here. So I'm going to show you some before pictures. I buried this. I'll run through some of my numbers and go through it. So this is before, doorway, hall closet, kitchen. At first we thought we could try and save the cabinets, but we actually found out like a lot of this stuff was missing over here. I don't know if I can show you guys. The one funny thing is, and Adrian, you could probably help me out with this, but they actually took a garden hose from the water heater, ran it up through the ceiling, and then actually had the laundry in the utility closet that's actually back over here. So unfortunately we couldn't use that. So we actually decided to take this wet wall and create a place for the washer right here. So we'll show you pictures at the end. That's the utility closet, the garden hose was coming in right here. So
That is not code.
yeah.
You can't do that.
Yeah. Kitchen here, another picture of it. Bathroom. And then this is actually a 3-bedroom house too, so this is one of the bedrooms that I have. Set this There's the pool, that's how it gets the name for the pool house. And then this is actually the garage. This was one of the parts that we didn't know if we could salvage or not. It was actually, the way the guy built it, it was just pitched incorrectly and it was coming down. Originally, we thought there was a huge crack in the foundation, so we were unsure if we could actually rebuild this if we had to. Luckily, as we got into it, we actually just almost decapitated the roof on the garage and rebuilt it from that side. So we were actually worried with the city of Hamden with how tough they are as far as inspections go, that if the crack was there on the foundation, they'd make us redo it all. So luckily we were saved, but in the beginning we didn't know if we could. So some of the details. So it's a 3-1 slab home, a little over 1,000 square feet, with 2.5 detached garage. Bought for $40,000, closing cost $12.93. So in terms of what I brought to closing was $41,293. I actually got a private loan at $52,500 at 12% for the year. This was actually funded through somebody's self-directed IRA. So total rehab was $36,571. We pretty much did everything in this house. HVAC, roof, new plumbing, new windows. The garage was repaired. Initially, we didn't know again if we could do that, but luckily we were able to. New kitchen, new bathroom, replaced all the flooring and trim, did the paint, and then after the rehab, we got to rent it out for $1,200. It's on 1-year lease right now. So this is where the refinance came into place. The ARV actually came in at $98,000. This was a little bit higher than we anticipated. It's right next to, pretty close to Purdue Cal, so we got a good appraisal on it. Refinance 75%, so the loan on that $73,500. And then I got an interest rate of 4.875. I brought closing costs to the table, obviously for the refi, $2,340. Interest paid to the lender, so the 12% for the year was $6,750. I also paid a processing fee to actually get the transaction. So all in all, I was all in for $86,954. That includes purchase, closing costs, interest on the loan, rehab and holding costs. I did collect some rent during that period too, so the rent collected was $4,840. That was minus the management fees I paid for the property management company. So total I was all in for $82,114. So out of pocket I was $8,614. If you look at the rental numbers, I have it rented for $1,200. Take 30% off for property management, repairs, and vacancy. So that's $360 a month. My principal, taxes, insurance is $593. So I'm cash flowing about $250 a month on this. If you take that number on a yearly basis and divide by cash out of pocket that I have, it's 34% cash on cash return. So here's some of the pictures that I have as far as what it looked like at the end. I realize I should have probably taken more pictures to save this presentation, but there's the front room that we redid. We painted everything gray and then obviously white trim. There's the kitchen. We actually knocked down the wall to create an open kitchen. There's the utility closet, no more garden hose hanging from the ceiling. Another picture of the hallway. There's the bathroom. That's it. Any questions?
Nice return.
How do you find your tenants? You just stick a sign in the yard, or?
So I'm using property management. I use Property Boss for this
Oh,
property.
got it, okay.
So they don't get at least.
What is it, 10% of rent, 12% of rent?
It is. So they charge, on this one was $600, so I think it's half month's rent, plus it's $500 is the minimum, so if you go to $750, they'll charge you $500 for it, and it's 10% for rent.
Got it.
They do all the background checks.
Yep, credit, everything. I know quite a few people use Property Boss too, so.
Especially on Hamlet.
Yeah.
What was the repair on the garage?
That ended up being, I want to say it was right around $6,500. Yeah, that was the biggest question mark and why I got such a, I guess, a lower private loan when it came to it. Usually we'd want more from it, but we weren't sure if we could save it, so we want to make sure that we're saving the appraisal and back end in case we had to demolish it to get rid of it.
What's the loan to value? What do they do, 70%?
Yeah, so
On a refi?
I think it's 75% in your first 1 to 6, and then it changes from 7 to 10. I'm not sure exactly what it is, but I know this one was 75%.
Would that depend on your credit?
Yes.
Okay.
So yeah.
I've had an issue like pulling out money on a rental I have in Hammond.
Yeah.
Like when I first bought it, I fixed it up, everything, and then when I tried to get a cash out refi, they said if you're within 12 months at the time you bought it, they go off the purchase price and not actual off of an appraisal. Until I've owned it for at least 12 months, then they can go off of the appraisal and give me like 70%.
Really?
I don't know if that.
That's just lender preferences.
Yeah, that's
why
an
the
internal
bill has
requirement.
seasoning, no seasoning
Okay.
required.
I think we have a banker here tonight talking about all that.
Yeah, that was Fifth Third or something.
Because I'm actually talking to a lender right now, and she said that if you want to do a rate and term refi, you can actually go up to 80% of the value too on your first 1 through 6 too. So I found that interesting. This is probably just your lender.
Yeah.
Any other questions?
And your lender was who?
So I used MB Mortgage. I just got in touch with Bridge Lending. I don't know if you guys ever heard of them. They're on podcasts and stuff like that, but they do a lot of financing for like investor loans.
What type of loan?
It takes to get rented out.
It's really quick to get right now. It only took like 3 weeks.
Yes, you literally, you walk across the street from Purdue Cal. or
Yeah, it's
Purdue
really
West.
close.
Yeah,
Yeah, it wasn't long at all.
yeah. There's a lot of demand for houses right there in that neighborhood.
Yeah. Yeah, it was pretty quick.
I mean, when it's renovated, as nice as that was, it's fairly easy to get that rented out quickly.
Yeah, exactly.
Do you use Section 8 at all?
I don't. I kind of like the houses that are a little bit more beat up, because then we can go in there and redo everything the way we want to, replace it, so it's a little bit nicer when it's done. So,
I do have a question. So on the,
Yeah.
on the loan, did you normally do like a 30-year, or did you do an ARM, or?
yes, I did 30-year.
30
Yeah,
year,
because I
okay.
still have the conventional spaces, so I'm going to use that up as much as possible. Coming up on number 7, so I have to start looking for alternatives. So, thanks guys.
Nice job.
Thank you.
So, one of the reasons why we wanted Travis to go today is it really works well with what we're talking about, using other people's money to do deals. You know, whatever you have in your bank account, that's a fixed amount. You know, whether you have enough to do 1 house at a time, 10 houses at a time, once that money is gone, you're stuck doing nothing. One of the reasons why Travis has been able to grow his portfolio as quickly as he has is because he uses a lot of money that's not his. Combination of private money, he's actually used all of the money here. He's done private, he's done hard, and then he does the bank financing on the end. So what we have tonight, we have 3 speakers, and all of these speakers are going to give you a ton of value. But we're going to start with Brian. Brian is our banker. He's going to talk about probably what you guys are most familiar with, getting money from a bank. Then we're going to have Brandon come up. He's with Renovo, who some of you have used. They're a hard money lender out of Chicago. He's going to talk about the hard money process, what's involved with that, how his company evaluates deals. And then we're going to have Justin come up and talk about private money. I'll introduce each of these guys individually before their turn. Once all of them have talked for 10 to 15 minutes apiece, we're going to bring all 3 of them back up. We're going to open up for Q&A. So during their presentations, let's not ask a bunch of questions. Jot your questions down, and then when they come up for Q&A, definitely ask those questions. So Brian, if you want to come on up. Brian has been in the region for just a few years. Just a couple? Yeah. He has been a mortgage banker for almost 27 years. My first loan about 15 years ago, Brian underwrote that for me back when he was with Countrywide. What happened to them?
You know what? I left. Next thing you know, they were gone. Could be coincidence. I don't know.
So,
Yeah.
oh, I gotta click on this thing now. So Brian now is with Fairway. You've been with them for,
March will be 10 years with Fairway.
cool. And they are broker, so you can go
No, we're a direct lender.
direct lender.
Okay. Anyone, real quick, and here's the deal. Yeah, I'll take it. Couple things. Number one, I'm not here to pitch Fairway. We're not going to go over all that. I'll tell you as much as you want to know about them later. Number two, Adrian mentioned. Write down your questions. Here's the thing. Each of you are unique. All your issues, everything that goes on with the financing is going to be unique. So if I answer a question here, it may or may not apply over here, right? So if you've got very specific questions, for instance, what you were just talking about, the issue you had, okay, do me a favor. Hold on to those. I'll hang out at the end. Right? After the Q&A, after everything, I'll go in the back. Anyone wants to ask a question, I'll answer it, but it'll be kind of a one-on-one because that's where we start to get into just a person's unique set of circumstances. All right? I'm just here to give you the basics tonight, real kind of top overview of, once you've got the properties ready, if you want to get into a conventional financing, I'll walk you through a few of those things. All right? Who's dealt with mortgage brokers in the past? Real quick. Right? A broker cannot approve a loan, they have to go out to another bank, right? You got banks at the other end of that spectrum, right? Wells, Chase, right? Bank of America, whoever, right? Okay, in the middle you got companies like us, independent mortgage lender. We do everything that a bank does. We deal directly with Fannie Mae, Freddie Mac, Ginnie Mae for government loans, all that stuff. But we don't offer bank accounts or other type of loans, right? We only do residential, 1 to 4 unit loans. That's it. That's all I can do. All right? So, just to give you an idea though, I'm guessing, other than Adrian, who's ever heard of Fairway? Okay. Fairway finished the first 6 months of this year the #5 lender in America. Okay. We're now on the hit. We're a couple billion behind Chase. For they were like 11 billion. We were 9 billion. Right. So we're a large institution, big company. We do a lot of business. All right. So real quick, got the property fixed up. However you got it to that point. Who is anyone here actually using a standard mortgage to buy the house? I get the feeling that's probably not the case on most of what you're doing, right? Who's going out and just taking out a straight mortgage buying rental properties? Anybody? No? Okay. So I'm not going to go through too far of this then, because if you were using it to purchase, if you just found a rental property that was already in good shape, you wanted to go buy it and rent it out, fine, we can talk about that. I'm going to fast forward then through this, because this is where you're really at, right? You guys are getting your money some way, somehow you get the place ready, now you're going to go refinance. That's what everyone's looking for, right? Okay. So, I'm sorry, I'm very bad with names.
Travis.
Travis. All right. So Travis was just talking about, gets the property ready, he goes to the bank. He said he can do a standard conventional mortgage. And he was talking about the difference between owning 6 houses or less, or 7 to 10 houses, right? All right, and there are differences, okay? Once you get to property number 7, we start to add a few things to the regulations. We ask for higher credit scores, we restrict a little bit of the amount of cash you're gonna get, things like that, all right? How many in here already own 6 properties? 6 financed 1 to 4 unit properties is all that counts, okay? How many are working toward that number, right? You own 1 or 2 and you're still working your way up that ladder. How many? Okay, so you'll have access to that. All right. So here's, of course, what you're going to be working with at the beginning. If you want to refinance, who knows rate and term? Rate and term means you're not pulling any cash out, right? You're just changing the, you've got a loan in place, you're just simply changing the parameters of that loan. Okay, 75% max, anything, doesn't matter if you're single family or multifamily, okay? Most of you, however, are trying to pull some cash out, right? We go in, we fix it up, now we try and get a little cash back. All right. Single family, you can go up to 75%. 70% is where you're capped at on a 2 to 4 unit, okay? If you're trying to pull cash out, all right? Six months is the new rule. By the way, depending, when, out of curiosity, when were you trying to do that?
This was like 7 years ago.
Right. That was the rule. In 2015, Fannie Mae changed the rule and said 6 months now. Okay. So for anybody who's wondering why one way, why another, it wasn't really a bank difference. It was literally the rules changed. Okay. So as the economy stabilized, they said, all right, we'll go ahead and do that. So cash out after 6 months. All right. We're going to talk in a little bit about getting cash out before 6 months. Anyone interested in that? Anyone wants to get their cash out really quick? All right, we'll talk about that in a second here. All right. Notice this one. How many of you are buying in your name versus an LLC? Who's using an LLC to buy? Okay. If you hold it in an LLC, it's 12 months. Okay. Now, here's the other thing. You buy it in an LLC, you convert it over to your name. Then it's a 6-month waiting period from that day, from the day you converted, not from the day you bought. Okay? So be careful how you move those back and forth. Any questions on that? All right.
You gonna call it too if I buy in my name, refi out, and then transfer to LLC?
No.
Okay.
Nope. I just want to know what you did the day you did the paperwork with me, right? That's all we're worried about. How are we taking title? How are we vesting? Whatever. Yeah.
How does it work with insurance, though? Did you quit claim it over? You know.
I don't know how your insurance agent will handle it, honestly. Okay. That one's past my area of expertise.
I wouldn't answer you.
I would. Yeah. I'd say you call your insurance agent. You know, you call your CPA. However you want to handle that. Your attorney. Just if you're gonna make switches back and forth, just know what you're doing, okay? Of course, you can roll all the costs in except for an appraisal. Appraisal is the one fee you always have to pay on any type of mortgage financing, okay? Cost of an appraisal varies depending on how many units your property is, all right? 3 to 4 units, of course, more expensive than a house. How many are doing houses here? How many are sticking only to houses? 30–40%, okay? Multifamily only? A couple. And then the rest are what, just a mix, or you just don't want to answer?
Mix.
Alright. Alright. Who's heard of delayed financing? Alright. This is where you can get your money out right off the bat. Anyone here ever? Nobody raised their hand said they even heard of it. I'll bet you someone's heard of it. Anyone used it? Okay. You pay cash for a house. Alright? Let's just, you pay $100,000 for a house. Okay? You run in there real quick, you get it fixed up, it's worth $130, $140, $150, whatever. Okay? As soon as it's done and ready, you can now go get financing. You're within the first 6 months. We'll give you your 100 back. We'll give you the initial investment back. Okay? Within 6 months, and we'll base it, it'll be a refinance. We'll call it a cash out refi, but it's only for the initial investment plus any costs you roll in. And it'll be based off the current value of the house. Okay? So you paid 100. If 2 months later it's worth 150, we'll call it 150. You're getting a new loan for 103, right? You roll in the costs. 103 out of 150 is 68, 69%, right? There you go. Okay? If you're borrowing the money to fix it up, I can't give you that money back right away. Yes?
So you do a cash out refi, you're doing it with government fees now?
When you say government fees,
To pull cash out of refi?
we're gonna price the loan as a cash out refi. Is that what you're asking?
Yeah.
Yeah, so by government fees, are you talking about loan level price adjustment? Is that what we're,
Taxes, is that what you're doing?
are we, yeah, I'm not sure what we're talking about.
That's
Yeah, I
some
think
fees.
that's a fee that the federal government charges for cash out on a refi.
Yes, but that is rolled into an interest rate.
Okay.
You won't pay that in cash. That'll be part of your interest rate.
Okay.
Okay.
Yeah.
So for instance, Travis. All right. So Travis said he took a 30-year loan at 4.875. If Travis had been purchasing a house that he was living in, he would have gotten substantially better interest rate, right? That's the difference. All those extra fees that we're discussing, that's actually rolled into an interest rate. Okay? All right. So this one we've done a couple times. It can be done with investors, just like anybody else, okay? The times I've done it, I'll be honest, been people buying their personal residence, okay? But it doesn't matter. I can do it, it's the exact same process either time. The only difference, of course, if you need the money quickly, I can't give you back whatever you used for the rehab, okay? So if you had to put 20 grand into it to make it worth 150, I can only give you your 100, not 120. Everyone understand that? Okay? All right, you can roll into costs, so you don't have to pay the closing costs out of your pocket. All right? Here's the big question, and I'm going to end it up real quick because we got other speakers and I don't want to monopolize the time. Adrian had asked me, one of the questions he said, be prepared to discuss the pros and cons of this type of financing versus another. All right. Very, in a nutshell, if you're a long-term investor, this is the financing that has the cheapest overall cost, correct? I don't think there's anybody really questioning that, okay? But what's the one thing everybody complains about when it's time to get a mortgage? Right?
Rules.
Rules and documentation, okay? All right? I hear people on the street all day long talk about how hard it is to get a mortgage these days. All right? I hear it on the radio, I see it on TV. It's not as bad as it was in 2009 and 10 when, you know, every internet article I read basically said no one's ever going to get a mortgage again in their life. Okay? So what is it you need to show me? It's not that much. Take a peek at this list. Okay? Show me income. Show me you got the cash if you're using it to buy. Okay? Or, who's ever heard that they need reserve money? Okay, you gotta have, you can't just buy a bunch of rentals and have $3 left in the bank. Okay, you gotta have money. Okay, I don't care if it's in a retirement account, I don't care if it's in your savings account, wherever, you have to have some cash, you have to be able to show us. Okay? Here's why I put good enough. Okay? Because I've heard everything from, you gotta have excellent credit, you gotta have top of the line credit, you gotta have great credit, you gotta have good credit. Well, what's good? Okay? Everyone's definition here of good credit is a little different, isn't it? Okay? Good enough. All right? Good enough is not much. You guys know much about credit scores? Right? What's the top of the line? Throw out a number that's pretty high up.
800.
850 is a theoretical high, yes. It's the absolute best you can have. It doesn't exist, but that's the theoretical high. Okay? Okay? But 750, 760, yes, we're very happy as mortgage bankers we see that number, right? Am I okay with 680? Yeah. Am I okay with 640? All right. How about 620? Right? We can go all the way down to 620. That's not great credit, believe me. You've got a few issues. All right. It happens, but you don't have to have perfect credit to go get a mortgage. All right. And then show us your financials, right? You got other properties? Show me the leases. Show me your expenses. That's all we ask. I wouldn't say the list is overwhelming, right? All right. So again, we'll go through some questions with the Q&A. After you hear the other speakers, I will then hang around at the end and I'll answer specific questions if you need. All right?
Awesome.
Thank you.
All right, so that is using traditional bank money. Let me go ahead. There we go. Now, Brandon is with a company out of Chicago, Renovo. They are hard money lenders. Who in here has used a hard money loan? A couple of folks.
Who have you used?
Renovo.
Hopefully that's the original.
So Brandon has been with Renovo for a couple of years. He is their, that's the wrong guy here. What are we here? Vice President of Lending, that's a fancy title. Tell us about what you do and a little bit about hard money.
Vice President of Lending.
It's a good title.
Basically, it just means working with borrowers like yourselves to originate loans and execute on your business plan. So, one of the big pieces of our value add is getting to know you guys and what you're trying to do. The first guy here spoke about, if you're doing single-family homes or multi-families, we want to know that. It's a different animal. I'm sure all the guys that have done one or the other can tell you all about that, but ultimately we want to understand your goal and then how our financing fits into that piece so that we can continue to capitalize you as you grow. So with that, we'll get started here. For us as Renovo, we are a direct lender. There are a lot of hard monies that are or are not. But ultimately, what hard money boils down to is, if you want to call it that, it sounds scary, but we are not a bank, so we're not interested in deposits, anything of that nature. We're interested in moving quickly, providing a creative and flexible piece of capital for your needs. So not too often, or I should say very often, I get calls of, hey, I got to close next week. Here's the contract, here's the scope, and it's like that. You get into a good rhythm with your borrowers after you sit down with them and get to know their business plan, and you can move quickly. So who's lost a deal because of speed? They haven't been able to close fast enough. Their cash was tied up in another deal. That ever happened? Everybody's won every deal in here. I guess I'm in the wrong spot then. So oftentimes I get calls about, my cash is tied up in this property. I went in all cash and bought this house. It's just getting started. But of course, that's when the short sale was finally approved, something along those lines. I need to close within 2 weeks or before the end of the quarter, something along those lines. Brandon, I really need you. So that's when we start the bus up and move quickly to make that happen. The customer service piece, I'll kind of just let that be as it is, because this is not about a pitch, we're just trying to give you a heads up of what hard money is. So typically, with the traditional route, you're gonna be putting down, you know, between 25 and 30% of the purchase in a rehab cost. Whereas with a hard money lender, it's gonna be between 20 and 10%. So less down, quicker close, the cost of capital is more expensive. So who's heard of 10 points and 20% hard money? Have you paid that? Okay, good. So our cost is typically going to be between 1 to 5 points on the origination, and then 10 to 15%. So when you take those factors combined, oftentimes people come to me and they say, "Hey Brandon, yeah, but my buddy, he's going to fund 100% of it." And then the next question is, well, how much of the profit do you have to give him? Well, I only have to give him 50%. And I sit there and I'm like, okay. And you're complaining to me about paying 2 points and 12%, and you get to keep all the profit. But you know, you got to put something down. You got to put some skin in the game. So, you know, what does that really translate into? Is, you know, us being a cheap partner for all intents and purposes. You know, we're not going to take half the money on the back end, but you know, we're going to need, you know, something to compensate us for our risk. Does that make sense? So, you know, this gets down to kind of nuts and bolts of what we do. Ability to close in 10 days, reliable access to capital. That comes into the business planning part of sitting down so that we can move quickly. So that if you say I have, you know, if you're a guy that does single families and you're like, hey, I just got a mixed use property on the south side, and I'll be like, what does that have to do with anything you've done before? Let's just pump the brakes and get to understand what's going on. Leverage, 90%. I hesitate, I wish I could just put an X there, because I'm sure I'll get all the calls about, you know, I want 10%, but starting the relationship is typically 20% down. We grow into that 90% as we get to know you, see the execution on the construction. Premier lines of credit, that just kind of goes in line with the business planning and then the 10-day close, because at that point you basically get a set terms, and from there you just, as long as the deal hits X, Y, and Z, it's moving. 24-hour construction draws. Anybody gone through a title company for construction draws before? All right. How was that?
Horrible when you want to draw on December 23rd.
I can almost tell you it's, you know, probably horrible if you wanted one on December 1st or any other day for that matter, because you know, when by the time you factor in lien waivers and those things, it becomes you know, a 10-day process. Is that fair to say?
Got it, January 4th.
Okay, so not far.
Yeah, sorry.
What we do require is lien waivers to protect you, so that your subs sign off on the work that's been complete, and then the next day we're issuing the actual draw. So when you have 3, 5 projects going at once, it really becomes almost like a widgets game, right, of manufacturing, where you're turning your capital, you got to figure out where to put it, and make sure that you're managing your cash flow. So those draws become pretty important. Now, if you had 3, 4 different projects and had to stagger it out, you know, you wouldn't really be able to count on what money, so you'd have to have a lot of cash on hand. And then the next couple items here are just, it's less to do with hard money than who we are, which is local expertise, strategic relationships, and real world underwriting. So I think the real world underwriting kind of goes along with, you know, the whole hard money, I guess, category, in the sense that banks just aren't really set up to do this kind of lending. Like if it's under $1 million, they're not even, they'll do it to you for a favor almost, when it comes to the commercial type of stuff. But for them to commit, you know, $1 million and earn 4.5% on what's drawn and the execution risk that goes along with it. I've sat in bank committees. I was a commercial lender for 8 years, and you can just start to see, you the faces just kind of gloss over, because it's just, they just don't make any money, and the risk becomes very, much higher. So I think that's where, you know, the local expertise and having folks on staff that really understand construction is where it really comes into play, and we're able to make the correct decisions. So that's the real world underwriting piece. And that actually goes along with if you're a 1099 guy, a contractor, a real estate broker, or something along those lines, where your income is lumpy year to year, you're writing off a ton of stuff, you've got your investment properties show, you know, that you're making break even, but inevitably, you know, there's a lot more cash coming through. So we're able to kind of walk through those, talk through those issues, and really get into the nuts and bolts of what your income is, and then properly underwrite you. And then I guess the second piece to the real world underwriting is your experience, right? I think we touched on it a little bit, you know, why you do single family to multifamily, but experience and cash weigh heavily in this business. Those are the two titans when it comes to underwriting. And then this kind of goes into what we talked about before. Who needs hard money? Those are the folks that typically have more deals than money. Goes into that scenario where you just bought a place all cash, and then the next best deal comes along, or the short sale. And then the growth mode. So where you've been running your business all with, you know, maybe $150,000 of cash that you had, or a home equity line that you've been, you know, growing over the years as your equity in your own home has been increased. But at some point you're saying, I'm doing 2 deals, maybe I'm doing 4, I should be doubling that, and that's where we can come into play. And then part-time to full-time, pretty self-explanatory, and then putting your own cash in the deal. You know, if you are running that $150,000 in one project, you could be all in, and sometimes, you know, that doesn't feel so safe, so you're willing to pay to have a partner come in and assist in that effort. So the last part here is about the percentage equity partner. So that's the you know, the guy that puts up all the money and takes half on the back end. Kind of moving on from that scenario, a lot of people, this is a classic kind of get your flipping business started kind of scenario, where your rich uncle is, you know, maybe has some real estate experience and is willing to put up all the cash, take a first lien, and then keep everything on the back end. And then, you know, from there, speed, and then frustrated with other lenders that overpromise and underdeliver. Again, that's not so much hard money or Renovo. So this gets into a little bit of the sales pitch, I guess, of who we are and what we do. Kind of save that for now, but in terms of how we actually structure a deal, it would be an advance ratio percentage against the actual cost. So we would advance up to 80 or 90% of the actual deal, depending on location and then borrower profile. And then we would kind of pressure test it by getting an as-is and as-complete value. So we're going to lend up to, typically on the first deal, 60%, but as time goes on, up to 70% against any given deal. So the combination of the two, you're going to basically get the lesser of. Does that make sense? Okay. Cool. And then points, anywhere from 1 to 5, and then 10 to 15% on the annual. So put it in the middle, about a point a month on the carry. And then we've got $12.50 for the actual origination, and then you've got appraisal costs of anywhere from $350 to $450. So pretty straightforward in that sense. Now coming back to kind of the pros and cons scenario. So the pros are kind of what we identified here. You know, the cons, I think, are when we see, you know, maybe a first-time investor get involved and they used hard money. I think we're all probably guilty of maybe structuring a deal not the correct way the first time out of the gate. So maybe they take on hard money because that's really the only person that will sign off on it. Inevitably what happens on your first deal, you're either over budget, it takes longer, any combination of things goes wrong, correct? So that's when hard money is probably not the best tool. That would be a con in the sense that it's gonna become really expensive to stay in a loan over a year. If you're able to turn it correctly, on time, you've got a system down and you're sticking to your business plan, that's when we are a cheap partner, so to speak. But I can't tell you how many times I've seen guys under budget, miss markets, something of that nature, and then all of a sudden we're the bad guy. And it's like, well, you didn't put in for permits, you know, for 90 days because you had this other thing going on, and then this happened, and then now I'm the bad guy because, you know, my monthly interest just keeps, like, I could have lent that money somewhere else too. So, you know, that would be the con, I would say, is not coming in fully prepared to take on the loan and having your ducks in a row. That's where you kind of hear the horror stories of people taking the properties back. Other than that, I mean, I would say the other con is if you, for whatever reason, thought it was going to be, you know, a property that you were going to hold on to, it was going to be short term, and it ended up being a longer term play, and you just continued to hold and pay the high interest. But for the most part, construction deals are pretty specific, so I would say the timeline, you know, if you weren't able to deliver, it'd be the only con. Trying to think what else. Other questions? I guess we'll get to the Q&A, but it's pretty much
Awesome,
it.
thank you.
Yeah.
I think one of the advantages for hard money with the houses that I've sold to, you know, someone like Brian getting traditional financing, the house pretty much has to be move-in ready. The appraiser is going to look at it and hit you if it's not in pretty good shape. With hard money, they don't care about the condition of the house because they know you're going to improve it. So that's a huge advantage if you're buying a distressed property. All right, so our final speaker on using money, using other people's money to do deals, is Justin. Justin's going to talk about private money. And in the past 12 months, he's bought over 80 houses, primarily with private money. So we will hear Justin go.
All right. How's everybody?
Goes to about the edge of the door, so.
Good? All right. So who needs more money for deals? Everybody's hand should be up. So I'm on both sides of the financing. I borrow money a lot from several people in this room. I shall loan money to several people in this room. So I go both ways. I believe in it. I've done a lot of deals with Renovo and hard money lenders. Hard money lenders are great if they're like Renovo and they do their part. Had a lot of deals go south that way. But most of the loans I do or get are private money loans. So you can see here, just like the name implies, it's a loan from a private investor. It's not a bank, it's not a hard money lender. Most of the time it's somebody you know. And you're going to use it when it doesn't fit conventional lending guidelines, or you're new, or you need speed. That's a lot of the deals that I do. People need speed. They don't want to wait for a hard money loan, or they can't because the bank may not accept an offer from a hard money loan, or a bank doesn't believe in lending to a house that's ready to fall over. And it needs a ton of work. So, reasons you should get a private money loan, or you have no credit or bad credit. I know plenty of investors that have terrible credit. They're actually good investors, but they have terrible credit, but a bank's not going to give a loan. You need to close your deal now. I actually did one last week. Made a deal with somebody, and I think he actually loaned him money, and I think it was about 3 days, so not too bad. You can get it fast. His deal made sense. We did the paperwork pretty quickly, and we got it done. Next one, a bank won't loan money due to the condition of the property. That's a big one that we see. I mean, most of the houses that people are buying, they need a lot of work. So most of the time a bank's not gonna give you a loan unless it's a 203K loan or something like that, where it's a rehab loan. Again, that kind of falls into, it doesn't fit conventional lending rules for whatever reason. You have limited cash on hand. I mean, let's face it, we all want to do more deals. And I know several people in this room that are doing 50, 60 deals a year. They're using private money or hard money loans or bank loans, a combination. And that comes the last one. You want to do more deals, right? We all want to do more. Nobody wants to flip one house a year. Nobody set out in life to be like, hey, I want to be the best flipper and just do one a year and make 20 grand. Right? I mean, nobody wants to do that. Nobody wants to own one rental for the rest of their life. Disadvantages, higher loan terms. You know, whether it's points and interest rate, the person is probably loaning to you based on a relationship. So it's going to cost you more. The terms aren't going to be as favorable. There's no doubt about it. When I borrow and when I loan, it's not always in my interest or the other person's interest, you know, compared to what they might get somewhere else. It's going to be short term, so less than 12 months. A lot of things are 6 months, somewhere around that range. So if you need something, if you're going to do a rental, a private loan's probably not for you. Nobody's going to give you a 30-year loan at 4%, like Fairway will. If you need that, or even, I mean, even construction, right? Because new construction, if you're doing something, most people don't want to be in new construction for 12 months. That may be something where either conventional bank financing or a hard money loan might be a better option for you, because they understand that you're not going to build a commercial building in 9 months. Last disadvantage, I think, is that the property is going to be your collateral. I mean, that's going to be on most loans. So you're going to have to put up some sort of collateral. You may have to put up something else as collateral too. You know, I mean, we do loans too where we may hold something else as collateral if the property itself really isn't a good piece. So people always ask me, where can I find private lenders? Everybody in my family is a deadbeat. Nobody has any money. So I tell people, stop telling yourself that. Somebody has money. Somebody you know, somebody you can put yourself in the way of. Somebody has money. They have to. I mean, I post on Facebook and my money is lent out within days. I've never had an issue. That's literally where I put my money out for loan. I don't put it anywhere else. I mean, I have relationships with people too, but. So I tell people, family members, I mean, those are people that believe in you. Even if you don't know what the heck you're doing, they believe in you, right? You could be terrible, but they believe in you. That's all that matters. Friends, that's a good one. Groups like this. We do loans in this group. I mean, I loan people money, they loan to me. I mean, that's, you know, if you're not part of a group, you're not asking for money, nobody's going to give you money if you're not asking for it. Social media, I use Facebook for a lot of it. This one, self-directed IRAs. That's where I do a lot of my lending. We were just at a IRA conference. Most of those people in that room probably have millions in their accounts, and they do not know what to do with it. They do not know what to do with it. And they're at a self-directed conference, so they want to know what to do with it. You know, they're doctors. They're the guy behind us owned like some sort of clean energy company. I have no idea what he was speaking because it was like half Chinese, but I know he probably had millions and millions of dollars. As far as 2015, there's $2.5 trillion in IRA accounts alone that's just basically sitting there. So there's money out there. There's no reason you can't do deals. Another one, real estate websites, Bigger Pockets. There's lenders on there. You can find them. But again, I think the biggest issue I find when people ask me for money is they don't have a plan. So if you're gonna borrow money, whether it's from a bank or a private lender, have a plan. Know your numbers. Know the property, know the comps. You know, have legit estimates. I mean, I do deals with people that I've done deals with them, so I know they know their comps. I know that they're not gonna come to me for a loan on something that's sketchy. But if you come to somebody with no plan, nobody's going to give you money. You're not going to come to somebody and ask for money. I mean, unless they're family, they really believe in you. They don't care about the money, I guess. But, I almost always take the deal that's well thought out and pays less than the deal that pays more and isn't well thought out or doesn't have, you know, or numbers that are super solid. Something. It has some sort of plan, experience, something. Because the ones that pay the bigger amounts are the people who are more desperate, and that's usually because they don't have a good plan. There you go, your family, they believe in you. So ask them for money. And I don't think you have to ask all the time too. I mean, I think it's one of those things where you talk about it enough and you educated on it and people know that you're doing deals, they're gonna ask, they're gonna wanna know more about it. Because people are tired of getting, you know, down here, we'll get to it, but they're tired of getting bad returns. You have a good track record. And after you do 5, 6 flips, people believe that you could probably do this. Or you put on a good show. They're tired of poor market returns. What are people getting in CDs? Or in the market? What are you guys getting? I mean, somebody has money. Nobody wants to admit it probably in this group.
0.75%.
What's that?
0.75%.
0.75%.
That's a good one.
Everyone here is moving their money there.
Yeah. I mean, if you talk to somebody about offering even 6 to 8%, it starts to look really, really good. Especially to people with money that are lazy, and that comes to the bottom. They really like real estate. They think it's awesome. They watch all the shows, but they don't like the hard work. So they can be involved in loaning money and get it back and get really good returns. So it has to be win-win, right? It's not about just doing more deals. You got to make it win-win for them. And that's how you're going to get more money. So just real quick, it's basic, but I guess it's find a lender, kind of negotiate your terms. So know up front where you kind of stand, what they're willing to loan, how much they have, how quick they can get it to you. That's an important one. You know, people come to me and they say, hey, I can give you 20 grand, what can you do with it? And I tell them, probably not to check. So you need people that can probably do 50 grand or more. It's not to offend them, it's just you really can't do much with 20 grand. What are you gonna buy? You can't even buy something Gary anymore for 20 grand. You can't even buy a Grammy car for 20 grand anymore. Find a good deal. Not a marginal deal, not a I think it's a good deal. Find a good deal. Something that's a no-brainer, especially if you're new. Know your numbers, your comps, your rehab costs, your ARV. ARV being after repair value, if you don't know what that is. A timeline, and have some sort of what-if budget. Pretty straightforward there. Secure their loan. You know, give them a mortgage, promissory note, whatever, just like you would with any other sort of lender. They're going to want something to protect them and secure the property. Always get insurance on it. Always protect them with an insurance policy. And yourself. If you're flipping houses with no insurance, I have one guy who always tries to borrow money. He doesn't want to get insurance on it. You're just stupid because you're going to lose somebody's money, and if I'm loaning you money, I'm going to sue you and take everything you have. It's only like $1,000 a year. So just get it. Most important thing, no matter what happens, whether you lose money, whatever, be prepared to pay it back. Because if you're flipping houses, you're going to lose. It's just a matter of time. If you don't lose, you're not doing anything. Because it's just a matter of time. They can't all be wins. So if you pay everybody back, even when it goes south, I've had that happen. Development partner's right there. Lost 13 grand on a rehab last year. Somebody in his family was a lender. That was the only person that made money on the house. We lost 13 grand. But we got their money back. So be prepared. There we go. I don't know why I came back. Good.
All right. Let's bring up 3 speakers up. Give them a round. So this was just kind of like the Reader's Digest on using traditional money, hard money, and private money. Literally, each of these guys probably could take a Saturday and talk just about their specific type of financing. So let's ask some fairly general questions. If you have a very, very specific question, grab these guys after. They have cards. Well, most of them have cards. But connect with them outside of the meeting. You know, take them to lunch. We all eat lunch. Pick their brains. See if they're type of
or Disney.
A couple of Bears games.
Yeah, take me anywhere, right?
So, all right, we'll open up for Q&A. Alex.
Is there a minimum value for the cash out refi on homes to do? It's got to be above a certain value?
No, but there are many lenders who have a minimum loan amount now. Okay, that's the problem. I've heard 50, I've heard 75. I'm talking about area lenders through this area. Okay, so 50 and 75 are the two numbers that come to mind. There are lenders that will go below that number. Okay, and I told Adrian it's not a pitch for me, so I'm trying not to get too much, but we're one of them. We go below 50. Not every time, right? But it depends on what you're doing.
How low?
My minimum right now is 35. Okay.
Investor or just owner?
Just any loan. Just, if we do a loan under 35,000, there's some federal rules that come into play regarding fees, and it's hard to actually get approved. I can approve you for the loan, we just can't get the loan to pass the test in order to be able to sell it on the secondary market to Fannie Mae. So under 35 gets really, really difficult.
What if you don't have a pay stub?
Now we're into income questions, right? Qualifying for the loan is all different than the rest of it, okay? You have to qualify for the loan, and of course, it's harder for me than it is for these guys, right? Okay? So if we get into qualifying, that's a whole other thing to talk about, but yes.
Yeah, you're screwed for 2
You
years
have to
now.
show proof of income to me. I can't do, the old no-doc days are gone.
I have a question for Brian also. For financing, like a 4-unit, debt to income, I know that comes to play.
Right.
Can you use the rental income from the other unit?
Yes. So I can use the rental income from any property you own. If it's the subject property, let's say it's your first one, I can use it from the other apartments there. Yes, I can use rental income.
You can use your first rental.
Yes, when you're buying your first rental,
Yeah.
okay, so let's say you went out and bought a 4-flat, right? Some people live in one and rent the other 3, I can use that income. Some people buy it as an investment, rent all 4, I can use that income.
Does that income have to be seasoned, or you can use it right away for the refis?
I can use it. No, I can use it right away.
Okay.
Okay, but then we're gonna have to base it on market rent as per what the appraiser says. That's not generally an issue. Market rent out here is pretty good these days.
I have a question to piggyback on that. So what if it's a 4-unit and only 3 units are rented at the current time, and you purchase a property? Do you
On the
kinda
day
like,
you purchase it?
on the day you purchase it, do you like, you project and say, you know, well,
Well, the answer to a lot of things in the mortgage business is, it depends, right? I've gotten real good at saying it depends, okay? And this is one of those deals. I'll just tell you this, there are cases where we don't have to have any of them rented. We will just simply use the market rent and give you credit for it, okay? However, it depends, right? There's other cases we're gonna say, no, I need to see a lease, okay? So that's a little back and forth on that, and we can talk after if you need.
You're not wearing.
So if you're doing a loan of 35,000, that means the ARV, the property value has to be 50,000 if you're doing 70%?
Yeah. Yeah,
And that's
if you're doing a cash out refi at 70, yeah. I mean,
And that's all at Lake and Porter County, or you do other parts of Indiana?
personally, I'm licensed in Illinois, Indiana, and I have a partner's license in Michigan as well. But out of our spot, we won't go below 35. Now honestly, you might go to a Fairway office in Arizona and they say, hey, we're not going under 80, you know? I mean, each branch within my company gets to set their own policy on that.
Where are you located?
I'm insured.
My question's for Brandon. You talked about, sometimes when the deal doesn't go the right way, is hard money callable? Can you, if you don't like the way that me as an investor is handling the situation, are you involved in that process?
We start what we call a work through, which is a nice way of saying we're going to try and basically fund you on an incremental basis for 5 or 10 grand. We'll pay a contractor directly to help get the project back on course. So it's really expensive for us to take over a project, go through the legal process, all that jazz. So we would rather get a GC in there maybe to replace and see the project through. So I'm sure if I read the loan documents, there's probably a callable action in there, but there'd be some kind of the defaults would have to be laid out, and you'd have the opportunity to remedy it or cure it. So does that answer your question?
I guess what I'm asking like you know, here we're talking like this is 12 months or less. If I'm projecting myself 12 months or less, but then I end up hitting month 14 or 15, as long as I'm paying your interest, you're not coming to me at month 12 and saying,
No, as long as the project's going well, we'll just extend it.
okay.
Yeah,
For
for sure.
feet?
Pardon me?
4 feet?
Interest. Good points on it too, yeah.
Negotiable.
Depends, right?
It's the
It's transferable.
All right, question for Brandon as
Yep.
well. Do you require that the people you lend money to for rehabs, do they have to use a GC or can they use their own subs?
They can use their own subs, but we'll want to see a track record in terms of what you've done before. And I don't know, some guys are contractors themselves or in the property management business. We just have to know the story. Does that make sense?
Gotcha.
Now, if you come to me a first time and you've never done a flip, it's going to be very difficult for me to get it through our loan committee without a GC. So again, it depends.
And for your draws, are there fees for the draws?
There are $149.
Brian, can a 203K loan be used for a flip?
No. Who knows what 203K loan is? You've done it as a flip, or you've done it as an owner occupied?
As an owner occupied.
It depends who's asking.
Hey, period of time.
It depends.
203K loan is an FHA loan. We loan you the money to buy it and to fix it up at the same time, right? Okay. FHA is owner occupied only, therefore you're supposed to be buying that place and living in it. Now honestly, if you moved into it, you fix it up, and 5 months later you sold the house, it's not like we can come back to you, right? But you couldn't keep doing that over and over. You couldn't show up and try and do that 3 times in a row. Okay? We will catch on. Okay? We're not the smartest of people. We might be a little slow on some things, but we will catch that stuff pretty quick.
Is there a certain number of 203K loans you can do?
Over a lifetime?
I don't know.
Yeah.
I don't know. I mean,
Like, again, you can't, basically here's what the bank, right? What the bank is saying is, we don't want you buying investment property with low down payments and better terms, just by calling it owner occupied, right? Technically it's mortgage fraud, okay? So that's what we're trying to avoid for all this, okay? So someone walks in the door and they say, hey, I'm buying this house, it's a 203K, okay, and then we flip it up. And then they come back in and they say, you know what, we decided to sell that, we're gonna buy this 3-unit building, but we're gonna live in one of the units, okay? So we can buy it with, 10 or 15 or 20% down as opposed to 30% down, and we're gonna get a better interest rate. And then a year later, you're in the office, well, we're gonna buy a 4-unit building now, I'm gonna live in it. No, you're not, right? You're probably still living in the 203K. So, yeah, I mean, eventually we're just gonna stop you and say, no, you gotta go back to the regular guidelines.
But why?
I
don't get it if you're doing
risk.
it.
Yeah. It is riskier for us, for you to own a rental property, right?
Okay. Brian, are these all Fannie and Freddie loans, or are they traditional, conventional?
Traditional conventional is Fannie and Freddie.
I mean, if you already have your limit on Fannie and Freddie, can you still come to you after 10 loans?
No, we're a Fannie and Freddie lender. What you need then is a bank who uses their own money. Portfolio loan. Okay.
There's a couple here who'll do it.
There are. There used to be more and they've been dropping.
Yeah. I've used it.
Any other?
Justin, do you require income documentation for private loans?
Yes. And that's because I want to make sure that you succeed. Because I want to make sure that the money is all going to the job and that you're not going to suffer through it and think about using the funds for something else. I'll do it with low experience and things like that, but I want you to succeed, right? So I'm underwriting my own loans in the sense of how much I trust the deal or trust you or whatever. And in my opinion, I I would just prefer that you have some type of job, whether it's real estate investing or something else.
And do you need that in collateral?
Well, I'd want the proof of income anyways, but the collateral, I'm gonna collateralize something. So if you got a really nice car and it's better than the house, maybe I'll collateralize the car. You know, it depends.
I'm trademarking the phrase.
It just depends on the deal, how many you've done.
The first time?
The first time I would just say, just bring me the details and.
Find a good friend.
Yeah. Yeah, we can talk about it. I mean, I tell people no and I tell people yes.
Now the car, do you have to own it? Or
The car? That's creative. Yeah, you'd have to own the car, something. I don't ask, I'll 100% finance everything. But again, I don't want to take the property back. I want you to succeed, and part of that comes with having some stability. Just like a bank would. You know, I'm making riskier loans, but that doesn't mean that I'm looking the other way and setting you up for failure. I don't want you to.
I mean, we sat down with a lady this morning for an hour that we did a private loan on that is struggling, and as easy as it would be to be like, all right, just deed the property back to us and we'll take care of it. We want her to succeed, and in the end, she's gonna make more money, we'll make more money if she succeeds versus failing and giving us back a gutted property now.
I think with any sort of loan, you gotta think as the person you're borrowing money from as a partner. Whether it's a bank, whether it's a whether it's Renovo, whether it's a person, they're your partner, right? And so you wanna make sure that it's a partnership. That everybody's protected.
So I'm assuming all three of you guys would do cross collateralization, other properties? In other states?
The bank will not.
Yes.
I know Renova does.
Yeah. You don't see banks usually do that commercial.
Credit unions.
No, yeah. Remember, I do strictly 1 to 4 unit residential properties. A commercial bank may very well cross-collateralize for you. They can set up something, but not, the average bank is gonna say, no, that property is my collateral. That's it.
So to one of you guys, this isn't really your business models, but maybe you got a referral. I have a 20-acre mobile home park. Do you know anybody that finances that, refinances that?
I don't think so.
Stuff.
Yeah.
That's oftentimes the answer I get right there.
I'll give you my card. I actually know somebody.
Justin, do you
Contact
offer
one of your IRA
transactional funding?
I'm waiting for Justin's answer.
It depends on the
Are you giving up a profit split or equity?
Well, I'd be willing to look at equity, yeah.
I'll give you a spot.
Some ownership.
I'll give you a spot.
vacation rental.
I'll upgrade that double wide.
We'll talk. What'd you have, Joe?
I was asking, do you offer transactional funding, like a 24-hour funding for
Yes.
maybe it's BC closing?
So anybody who doesn't know what transactional funding is, it's going to happen, especially if you're a wholesaler. There was a few title companies that would double close same day and use an end buyer's funds to do it. That is illegal, and the one that was still doing it got caught. They got fined, and so we will fund transactional funding. Usually it's 2 to 3%, depends on loan amount, but a $1,500 minimum. It's going to require insurance even if it's same day, unless it's last minute. We know it's closing probably, so I guess it depends again. But I will not do past 1 day. I'm not going to do multiple days or anything like that. But we will do transactions. So if you have something closing in the morning and you have it resold in the afternoon, we'll fund it.
I got a question. How do you guarantee the end buyer, I guess, purchase?
So what we do is we make sure that we have a title commitment, a purchase contract, and that we make sure that end buyer's funds in before we allow, before we allow the title company to release our funds to the A transaction. Is it 100%? No. Am I funding risky deals? Yes, in the sense that it's transactional funding, but I'm making sure that everybody's funds are in and that they're closing, basically. Could they back out at the closing table? Sure.
We also have a note and mortgage on it, and we know the house is at a low enough value that that person will be able to sell it at some point anyway.
We are mortgaging the first transaction, we're just not recording. If the second side went south, we would have to record that mortgage, but basically they're just gonna hold it in escrow until it closes.
Up to what amount?
Depends on the day.
That's a good answer.
No, it's true.
It's a fair answer, yes.
You talked to me last week, we weren't doing it. I'll do it all week. This week we're good.
Yeah, I mean, we can, I mean, I tell people, you know, find a deal and then find the money, right? So, you know that, you've done enough. I mean, give me a day, I can give you $1 million. It's not real hard. Just make a few phone calls. You know, I won't even use my own money to transactional fund it. But again, it depends. I mean, I don't have $10, $15, $20 million. That's where you need Renova. Or really, really rich family.
Any other questions? Awesome. Well, again, if you guys have something specific, definitely grab these folks after, get their contact information, and meet up with them and call them and have your specific question answered. So let's thank these guys for coming up today. All right. A couple more things before we finish up here. I'm going to turn this back on and blind you guys. Does anyone have any deals? Anyone wholesaling a house they want to sell? Anyone looking for money? They have a joint venture? Anyone have money? Introduce yourself, stand up. What do you have?
Al Perez, owner of Preferred Homes LLC, looking at buying 3 houses. So if any one of you guys are wholesalers or have possibly fix and flip, mostly in Indiana, or in Porter County as well, Lake or Porter County, not Gary.
I need 3 houses too, so.
Just let them fight it out.
I'll pay more. So.
Well, just like the last one? Anyone else have anything?
We have money to lend. So does Renova, so does the bank, so need money, talk to somebody. We are looking for a dispositions person to sell our properties, as well as a licensed, they have to be a licensed agent, to take on some of our listings, as well as listings for the rehabbers that we work with. If you're interested in something like that, it'll be performance-based, it has to fit our core values. See, either me or Adrian, you'll be replacing Adrian.
I'm fired.
You're a crappy teacher.
I suck. Can't even run a PowerPoint. I'm just gonna golf all the time, so. Anyone else have any deals? Anyone need money? Have money? No?
Anybody in the room do Fort Wayne?
Fort Wayne. What about Kankakee? I had a guy like contact me at church yesterday. He has a house in Kankakee, 25 grand.
Depends on where at.
It's flooded.
It's
floating. Yeah.
That's probably why he called me. You know,
For this week's what I heard.
I looked at the map. It's several blocks off the river, but I don't know anything about the area. Is it? So, he sent me the info today, so it must be good. All right. Next meeting is November 20th, and we're going to talk about wholesaling 101. Basically, we're going to walk you through how we find our deals, and who in here has bought a wholesale deal from us? A couple of guys. How did that deal compare to stuff you found on the MLS?
Closes a lot faster.
Closes faster, easier, may or may not have been a better deal. Just depends on weird video. But we're gonna walk you through what we do running our wholesaling business. And you know, whether or not you want to be a wholesaler, you probably learn about how to find houses that are off market, how to evaluate deals. So that's what we're going to talk about in November. Quickie on the membership here is $10 a month per person. If you want to pay an annual membership, it's $90 for 12 months. For your spouse or business partner, it's $135. And what that allows, in addition to getting a break on paying every month, is if you miss a meeting and the topic really intrigued you and you want the video, if you're a member, you automatically get the video. If you're not a member, then you have to pay $10 for the video, just as if you're a come. So if you're interested in that, you can contact me after. Again, we always meet on the third Monday of the month, 6:30 to 8:30. Here in the office, at some point we're going to outgrow the space and we'll get a big luxury hotel or something like that. So that is not what we're talking about. There's always a slide I forget to update. We're not talking about money next month. We're talking about wholesaling. So again, go on Facebook, find us. It's at NWI Investor Group. Like the group, follow it, post stuff that you have on there if you have a wholesale